about currency, strength and weakness, and the overall mood of the market. But in this training today, we're going to be looking at technical analysis. I'll be looking at characteristics of price. All right. Now, price. Now, when we talk about price in forex trading, price is the foundation of everything we're doing. Now, in trading, we're not trading, we're not actually trading physical assets. What we're trading is the current market price of these assets in the global financial market. For example, if you're talking about trading gold, we're not trading the physical gold. What we're trading is the price of gold in the international market. If you're trading forex, which is currencies, we're not having any dollar bill with us physical. No. What we're trading is the current market price of the dollar in the global market. The same thing, crude oil. We don't have any depot where we have barrels of crude oil. What we're trading is still the current market price. So price is very, very essential in this market. And that's the reason why I want to show us the characteristics of price. How does price behave? When you know the way someone behaves, then you know how to manage your relationship with that individual. Same thing with forex trading. Many people don't know how price behave, and that's the reason why they keep having losses in forex trading. We are going to demystify characteristics of price in this training today, and hopefully you become a better trader by the end of this training. All right. Now, the first characteristic of price is called trend. Trend is the first characteristics of price. Now, we see that trend is a tendency for price to move in a particular direction over a period of time. So trend means price going in a certain direction, maybe upward or downward, over a period of time. So trend can be long term and it can be short term. Short term can mean in a matter of a few days. Long term can talk about weeks, months, or even years. That means that price can go in a particular direction for a whole day. And because it's going that the whole day, you can either buy or sell based on that direction. And price can be going in one single direction for the next 5 days, 1 week, 1 month. And you are expected to trade in the direction of that overall movement of price. So we say that trade can be long term or short term. And success with trading is largely tied to the trader's ability to identify trends and be able to position yourself for profitable entry and exit points. Now, trading requires you to know the direction that price is going. You see, as a trader, if you can understand the direction that price is going, you have solved more than 70 to 80% problem of trading. I'll repeat that. If you can understand, if you can identify the direction that price is going, you have solved more than 70% of trading problem. So we say that success with trading is largely tied to the trader's ability to identify trend. We want to trade dollar. Where really is the dollar going? Is it going upwards or downwards? If it's going upwards and you are selling downwards, you're going to be wrong and you lose. So you need to know where really is this instrument going. That's the first thing. Now, there are three types of trend. There is an upward trend, the downward trend, and the sideways trend. Upward trend or uptrend is when price is trending up, and downward trend is when it's dropping low, and sideways is when price is in a range or a consolidation. So let's look at the types of trend. Uptrend. We say that the uptrend is when the general price direction of an instrument is upward. So in an uptrend, price is trending higher. It's going from 1 to 10 to 20 to 50 to 100. It's climbing higher in an uptrend. Now, in trading, price doesn't just jump from 1 to 100 like that. No, it moves in a zigzag manner, which is called a higher high and a higher low, a higher high, a higher low, a higher high, a higher low, and so on. So price makes a series of higher high, and higher low. Now, for every new higher high, we see a higher value of price. Again, price makes higher high, higher low, higher high, higher low, higher high, higher low, and so on in an uptrend. In a downtrend, price makes a series of lower high and lower low, lower high and lower low, lower high and lower low, lower high and lower low. So for each lower low, price is dropping lower. So in a downtrend, the general direction of price is downwards, and price makes a series of lower highs and lower lows. Next is called the sideways market. Sideways. Now, there are three names for this. You can either say it's sideways, you can say it's a range or a consolidation. So you can hear the word sideways trend or sideways market, range market or range trend or consolidation. They all mean the same thing. This is when the general price direction of an instrument is not clear. In a range market, there's no clarity. You are not certain whether it's buying or selling. And that's the reason why it's not all the time you will get signal in the market. For many beginner traders, their understanding is that anytime you are doing analysis, there must be signal. There's nothing like that. There are times there's no signal, there's no trend, there's no direction. So because of that, three things we do in forex trading: we buy in an uptrend, we sell in a downtrend, and we stay out in a range market. There's nothing you can do in a range market, just stay out. That's the best. Sometimes in trading, staying out is still as good as winning. It's not all the time you must trade. If there's money to trade, go and do other things. So range market also happens in this business. And it's a time when there is no direction in the market. Now, this is just a little summary of what we've done so far. In an uptrend, price is trending higher. Now, here you can see that price breaks out of a range into an uptrend. It broke out downwards into a downtrend. Here we have a slight range. Okay, let me start it all over again. Price initially was in a range. It broke out into an uptrend. It entered the range again, broke out into a downtrend, entered the range again, broke out into a downtrend. Every time you open your chart, going forward from today, you will now be able to break down what you're seeing on your screen. Price is either trending up, trending down, or in a sideways trend. Now, we've looked at the first characteristics of price, which is trend. Now, the second characteristic of price is called retracement. Now, retracement is temporary price movement against the established trend. Again, we say it is any temporary reversal in price within a major price trend. The word within is key here. Now, let me take you back to one of the previous slides. Now, we said that retracement is temporary price movement against the established trend. That means we need to have an establishment already before we start looking at the word retracement. And on the screen now, you can see an uptrend movement. Price is trending higher. So the overall trend here is bullish. Now, every time price is going in line with that uptrend, it is still in the same direction as the trend. So what is retracement? Retracement is any time there is a temporary sell within a buy. So let me clean it off again. Overall trend here is bullish, but anytime you see a short sell within a bullish trend, that is called a retracement. All right. Retracement is temporary movement of price against the established trend. Now, after every retracement, the next move is always called a continuation. Don't forget the first characteristics is trend, then we have retracement, then we have continuation. Continuation means that after price has ended a retracement, price will continue in its original direction. What do I mean? I'll go back to that previous slide again. I find it easier to use that. All right. Now here again, we say that the overall trend here is bullish. We say that retracement is temporary movement of price against establishment a trend. But after every retracement, there'll be a continuation. Continuation here means that price goes in the original direction again. Now, let me explain something. Now, we say this is a retracement. The problem with many traders is that many times, because people don't understand the overall trend, they are trading retracement. Anytime you're trading, especially you're trading on just one time frame, there is a high chance you will enter into this error. If you analyze your chart properly, you are supposed to do what is called top-down analysis, meaning you look at the higher time frame to get an overall direction of trend. Then you use a lower time frame to make entries. Lower time frames are to be used only for entries, while the higher time frames are to be used to get overall direction. Earlier today, we had our daily market analysis in the morning, and I was giving my view on some particular instrument. Let me confirm CAD CHF. Okay. All right. Now, I made us understand in the morning that overall, I have a particular bias on CAD CHF. I'm bearish, regardless of what happens in the market. That's because of what I saw. Now, in this case, this is an overall bullish. This is trend. A minor sell is a retracement. After retracement, there's a continuation in the overall trend. After that, a retracement. After that, continuation. The problem with many traders is that you are placing a sell in a bullish trend. You know, the trade goes in your favor by like 10 pips. All of a sudden, market reverses back to its original direction and you end up losing the trade. Has that happened to you before? If it has happened to you, type yes in the comment section. And the painful thing is that after the trade closed against you, you know, it now continues going in its original direction afterwards, and you end up losing the trade, and you end up even losing the other opportunity. It happens a lot to many beginner traders, and they would start saying that, oh, maybe Forex is not even true after all. Thank you, Chrisabel. Some will say, yeah, maybe Forex is a scam. No, it's not a scam. That's why we're teaching this class today, for you to know the characteristics of price. Oh, God's way, yes, on your demo account. Don't worry. You need to graduate from demo to live. Demo money is this audio money. Even if you make profit, it's audio. It's on live account. You are getting real money. John Olushi is saying severally. That's the reason for this class today. For you to know that there's a possibility you are trading a retracement instead of the original trend. You are only to trade in the direction of the overall trend and not retracement. Let me just show you something. It's not within the scope of this class, but I'll show you what I'm trying to explain to you. Let me see if I can get to my screen. Just a second. You see, you don't never trade against the trend. One of the fastest ways to keep having losses in Forex is when you trade against the trend. All right, this is a CAD CHF. All right, okay, let me share the screen now. Okay, this is CAD CHF. If you don't join our money analysis or analysis session generally, you are missing a lot. You are missing a lot. Now, this is CAD CHF. Let me remove this lower trend line. Now, just as I was saying, this is an overall bearish trend. This buying here is a retracement. Price is back to the trend line. I'm expecting a continuation. So I'm not looking for a buy. Rather, I'm looking for a sell. That's all. Never trade against the trend. The overall trend is bearish. In a bearish trend, we are only to look for a sell. We don't have any business with a buy. But you will say, oh, but I'm seeing the market is buying. It's not your business. It's not your trend. It can reverse anytime. And that's why you are losing. See, as a trader, you have to identify the trend and stick with it and trade only in that direction, regardless of what you're seeing. Now, this trend I'm showing you is on the higher time frame. It's on the daily time frame. So if I flip it down to a lower time frame, like 1 hour, I now have a setup that I'm looking at to make my entry. I have a rising wedge on 1 hour, and I'm seeing a head and shoulder form, which is a bearish pattern. I said it in the morning that if the news comes out good, we're supposed to see a crash on the CAD CHF. But if it comes out bad, it will go back up to retest this trend line, this resistance, complete the head and shoulder fully, and still crash. I'm still expecting a crash. So I've not gone against the trend. The overall trend is bearish, and that's what I'm still looking at. So there is trend, there is retracement. Never trade the retracement, only trade the underlying trend, the overall trend. That's what you have business with. So I said it earlier that one of the things you need to learn as a trader is how to identify trend and now position yourself for entry. Never keep running that. You know, the problem of many beginner traders is that you are always running uh after every market movement. It's buying now, let me buy. It's selling now, let me sell. No, it doesn't work that way. you need to first identify the overall trend and only stick with that trend. So we've talked about trend, we've talked about retracement, we've talked about continuation. Continuation is when price continues in its original direction. Overall trend is bullish, trend, retracement, continuation, retracement, continuation. All right. Now the last one is called reversal. Reversal. Now we say that reversal is a major change. Look at the word major change. It's not temporal, it's a major. Okay, please mute your device if you are joining this class. Reversal is a major change in price direction of any trading instrument. A reversal can occur to the upside or downside. Following an uptrend, a reversal will be to the downside. And following a downtrend, a reversal will be to the upside. Now, if you look at the diagram here, the overall trend here is bullish. Price is trending up. But on getting to this point, instead of going further in the bullish direction, what happened? It reversed. Reversal is a complete change in trend. If you're taking a trade and suddenly you see price is going against you by 100 pips, 200 pips, 300 pips, 500 pips, there has been a major, you are already on a reversal. That's the truth. You are already in a reversal. You know the trend. Now, the problem of many traders is that you now say, okay, let me leave the trade. Eventually, I believe it will reverse and go back. Will that happen? Maybe. It's not guaranteed. It can happen and it may not happen. You know, the issue at that point is not whether it happens or not, is do you have enough liquidity in your trading account to hold on to that trade pending the time the reversal happens? Sometimes the reversal might take the next 2-3 months before price goes back there. Can you withstand? Can your account withstand it? And there are times it may never reverse back to that position in the next 1 year or never go back there again. You know, either case, if the loss is too large, what happens? Your account gets blown. So these are the 4 characteristics of price. And if you can inculcate this into your trading, I guarantee you that your trading will improve. Understand there is trend, there is retracement, there is continuation. This is trend, uptrend, downtrend, sideways. There is a retracement, which is temporary movement of price against established trend. There's continuation. Price continues in its original direction after every retracement. Then there is a reversal. Reversal is a complete change in trend. Okay, let me just take you to the chart again to practically look at all this. Then we'll round up this session. Okay, I'll look at Euro USD. No, we don't share the slide, but then you have the recording. The recording will be posted into your group, so just watch out. It's a recorded session. That's in response to Adebayo A. All right. Looking at Euro USD, daily time frame. I just want to, I'm trying to scroll back to a particular period. All right, good. Now, looking at the screen, Euro USD, this is the period when the war between Russia and Ukraine started in 2022. And we can see that a trend, a long-term trend was developed. You know, the Russia-Ukrainian attack happened, I think, early February 2022, thereabout, around this period on the chart. Sorry, I'm not doing analysis now. I'm explaining the thing, the topic we're doing. After I'm done, I may just check for you, but this is not an analysis session. We're not doing analysis now, but I will just oblige you. But let me get through what I'm showing you now. So there's an overall bearish movement because of the effect of the war. Now, never forget, fundamentals override technical. The market moves in long-term direction, majorly due to fundamentals. It's fundamentals that drive price in a direction for a long period. All right. Now you can see that for a long time, for like a year plus, price is in a downtrend. This is a downtrend movement, and we can use I'm actually taking this in combination with a trend line. So if you have an understanding of trend line, pick what I'm sharing with you faster. Excuse me. So you can see that in this bearish trend, the best thing you can do now for trend lines, after the second touch, from the third touch, you can start looking for trading opportunities every other time price touches the trend line. So in this overall bearish, the trend is confirmed now to be a bearish trend. God's will, I'm only showing you the general direction. I'll show you retracement now. We have 10 minutes to go on this call, so I have to be fast. The overall trend is bearish. So this, every time you are seeing a buy, that is the retracement. These are the retracements I'm drawing now. These are the retracement. Like I said, you don't have any business with a retracement. If you have identified overall trend, you are not trading the retracement. In this case, like I said, for a trend line on the third touch, from the third touch, you can start looking at entries. Now, I'm not showing you exactly entry strategy in this class. I'm only showing you direction. What I'm showing is more direction. But you can see that from the third touch, price started selling. This is retracement. This is continuation, is a sell. Retracement continuation is a sell. Retracement continuation is a sell. Retracement continuation is a sell, and so on and so forth. So you are not violating the law of trend. You are not going against the trend. You are only trading in the direction of the trend. Overall trend is bearish. You are only looking for a sell in that direction. Now let me show you. Now this is a swing trade. This first one produced about 380 pips. The second one produced about 650 pips. The third one produced about 448 pips. The fifth one produced 610 pips. And the last one produced how many? Let's check. The last one produced about 290 pips. We are only trading in the direction of the trend. So your first job is to identify the trend. Is it a short-term trend? Is it a long-term trend? And you only trade in the direction of that trend. So after every retracement, there is a continuation. Your business is overall trend and continuation of trend in that overall direction. Now, after price has retraced and continued, up to this point, there is now a reversal. This is a reversal. A reversal is a complete change. You can see that from this point, it didn't sell anymore. After this point, it retraced. Instead of dropping further, what happened? It broke the trend line to the upside, retraced to retest the trend line, and continued buying. This is a reversal. Now, reversals can be traded on its own, but most times, if you are on a sell in this case and you don't know when to get out of it, you may get caught up in a reversal. That is what normally blows account most. When you are caught in a reversal unawares, there's a high chance your account may go for it. All right. So these are the characteristics of price, which is in line with what I've taught today: trend, retracement, continuation, and reversal. All right. I'll take questions now as we begin to round up. We have 6 minutes to go. If you have any question, you can go ahead. You can unmute or you can type it, and I'm here to respond to you. Any question? Okay, so somebody asked me a question about USD card, and I'm attending to that now. All right, so this is USD card on the daily time frame. My overall trend, just in line with what we're saying, my overall trend is bullish. Why? Price is making a series of higher highs and higher lows. It's touching the trend line, and I'm expecting a bounce in a bullish direction. But then that's on the daily time frame. But then I can see that today's candle looks like It's trying to close the day with a rejection candle. So let's go to the 4-hour time frame. Now, on the 4-hour time frame, there is a resistance right here. And in terms of chart pattern, I'm seeing the possibility of an inverse head and shoulder pattern. Price may drop, but then ultimately it's going to break out to the upside. Don't forget our overall trend here is bullish. Well, if I say it's going to sell, then that tells you that's a retracement. I didn't say you should sell it. But there will be a retracement, then price is expected to break out to the upside to complete an inverse head and shoulder pattern. Overall trend remains bullish. We have not done anything against the overall trend. So that's why I always tell you that you don't have any business with a retracement. Just understand your overall trend and only trade in that direction. I'm expecting a little sell here, but like I said, we're not selling it. When price breaks above the neckline, then we trigger our buy and we'll run into profit. So that's the answer to the question that person was asking about CAD CHF. I am overall bullish on USD CAD. I'm bullish, but then there's going to be likely a retracement before that bullish breakout. All right, we have 4 minutes to go. In a situation where you go against the trade, can you edge? Don't edge, just close the trade. Learn to accept losses. It happens. It's part of trading. That's why you don't take unnecessary risk. You need to know your risk management plan and never risk more than 1 or 2% of your account per trade. So if you're doing that, there's not going to be any anxiety closing a losing trade. It happens. You can make a mistake. You are not a robot. You are not AI. So if you observe that, okay, you've made a mistake, learn to close your trade and wait for the clear signal to go in the right direction. That's way better. All right. God's Will Sunday is saying, I'm a beginner with very little knowledge. Can this class put students in my seat through? Sorry, I'm not getting that. Can you rephrase that question? I'm not getting what you're trying to say, God's will. Any other question? I'm rounding up now. Students who have this little knowledge, this is part of the knowledge you need. Is it what I will encourage you to do is that after this class, watch the video again and go on your chart and practicalize the things that I've taught you now, and begin to imbibe it in your trading gradually as you go forward. How to know how to calculate 1% risk is not difficult. You may not need to do any serious calculation. If you're trading with $100 account, never trade above 0.01 lot. I'm typing that in the comment section now. $100 trade 0.01 equal to 0.01. Never go above it for any reason. If you're trading $200, never go above 0.02 lot. If you're trading $500, never go above 0.05 lot. You can even make it lesser. There's no crime in that. So if you can stick with that, you can be safe. Reason is because you're trading $100, 100 pips will just be $10, which is just 10% of the account in case things don't go well. So even if you're looking at 10 pips, that's just $1, so that can keep your account relatively safe. All right. A last question. I'm closing here now. Okay, so in the absence of any other question, this is the end of the webinar this afternoon. I'll drop the link to this video. Make sure you watch it over and over again. All right, I'll see you in another class. Take care. Bye.